Hi everyone, this is Prachita Talwar and welcome back to Market Analyst Pro. In continuation with our knowledge series on how to trade using technical indicators, today we're going to talk about stochastic RSI and moving average and how we can use these two technical indicators together in order to predict crash and hence pull out before it really happens and in turn make money. Giving you little information about stochastic RSI, it is a momentum indicator. It was created in order to have a more sensitive indicator that is attuned to a specific security historical performance rather than a generalized analysis of a price change. And on a scale of from 0 to 100, above 80 lists a overbought condition and below 20 lists a oversold condition. But overbought doesn't necessarily mean the price will reverse later, just like oversold doesn't mean the price will reverse higher. It just tells you that the conditions are near the extremes of its recent readings and there might be a trend reversal. While smooth moving average is a technical indicator that can aid in determining if an asset price will continue or if it will reverse a bull or a bear trend. Hence, using both in conjunction can actually tell you a lot. Let's see it on the original chart. We spoke about the M-shaped chart in my previous video, and we were hoping or not hoping to see it again here. So in case a M-shaped pattern forms, then that is a very serious indicator that there's going to be a reversal of the trend and more towards a bearish trend. And right now everything looks picking fine, but we have to read through lines and we have to see things. How do we do that? I have opened a stochastic RSI as well. So in stochastic RSI, the only thing you should note is that there should not be a formation of a lower high. What do I mean by lower high? Let's see 2009 chart. So this was a higher high, right? It was a higher high. And then this was a lower high that was formed. And that was a start of a trend which led to a 2009 crash. We have to, and thereafter you can read the chart yourself as well. We've not seen a lower high after that. And we are hoping that this does not form here again. If it does form, please pull out of the market and wait for the crash and then come again when the situation is correct for you to be a millionaire, as majority of the millionaires were formed during 2009 crash. So might be your chance, but keep on a lookout with respect to this. Also, simple moving average, if you'll see now, okay, this keeps on happening. Stochastic RSI, it has to. Anything that goes up has to come down. So it keeps on coming down and then going up unless and until there's like a specific lower high formation. You need not worry, it keeps on happening. But whenever it happens in conjunction with SMA line, see, this is an SMA line. I'll put it in another color actually for you to easily see this. No, can't see the color. Still not able to project. Blue we already have. Sorry, just give me a minute. I guess this is fine. Okay, so you're seeing this purple line of stochastic of SMA. Sorry. So when SMA is also below the moving average of Bollinger Bands. Bollinger Bands also we've spoken about before. In case you want to know more about it, please see my chapter number 2, which is on Bollinger Bands. So if the SMA has crossed moving average and also your Stoch RSI is falling, perfect indicator of an impending crash. So if you'll see, actually, if you'll see, Stoch RSI has not fallen below, sorry, SMA, simple moving average, smooth moving average, has not fallen below moving average after that, after 2009. If, yeah, never. But lately, here, in 2002, 1st of June, when we saw a 50% correction in the market. Also, you can't see it much here in 2020 because it was a very haphazard market. People who have experienced 2009, they got into the market as soon as it fell. So, you will not be able to see this SMA falling down because they were right there groping the situation and hence the rally. But then, of course, there was a correction impending. So there was a 50% fall. Here we can see the SMA going down and also the Stoch was falling down. But there was not impending crash because see, here if you'll see Stoch RSI, there is no lower high formed. So these two things have to happen in conjunction. One, a lower high has to be formed and SMA has to cross moving average. Now, here we are. In case there is a Stoch RSI with a lower high that is formed, that is your red light, and that is when you have to tread the line very carefully. Better pull out and come again when the time is right. So why are we saying this? Because even the M-shaped pattern is going to form in case, most probably. And we right now indicators are just fine, but market conditions and the market sirens are ringing, and it always happens. So whenever the market is high, everyone is singing the tune, but somewhere you can see the ring, you can hear the sirens. So it's good, it's better to hear the sirens and read through the technical indicators and yeah, do the best with your portfolio. So please read through the chart and just see, in case you have any questions, just drop down the message and I'll try and revert as soon as possible. Stay fit, stay safe, and keep following Market Analyst Pro. Thank you so much. Take care.